So, welcome to the last episode. It's been a fun adventure, but I'm happy I can show you this final piece of the puzzle that's going to help you to take your trading, if whether you're beginner, intermediate, or very well experienced, to the next level. So, episodes I've shown you how to do support and resistance. I've shown you how to do your trend lines. Shown you how to counter trend lines. I've shown you how to do moving averages. I've shown you how to know when price is ranging. I've showed you how to know when price is trending. I've showed you when to take a ranging a ranging entry. I showed you how to take a trending entry, um, and some of the trading conditions that you need to. Further episodes, I'm going to show you how to backtest. I'm going to show you how to forward test. I'm going to show you how to get down the pairs you need, the pairs you want, the things about different pairs, how they act differently. There's so much stuff we can go through. So many nuggets I'm going to present to you. So many nuggets. So many chicken nuggets. You won't be able to. You won't be able to. You won't be able to catch up. Come on. Um, but yeah, so with the last one, um, it went into the support level. Once it hit the support level, you looked for the price action, which was the candlestick pattern. Then you're waiting for it to break the counter trend line, the lower low or higher high in the direction of the lower low or higher high in the direction of your trade. Break below, enter, stop loss 8 pips above this high, and then you want to take it to the wick of the lower low on the higher time frame, and the same on this one. In future lessons, I'm going to show you how to use Fibonacci to get some bigger take profits, how price swings, but this one I'm going to show you quickly how to manage your trades once you're in them, so you can get as many pips as you desire. Sometimes you might get knocked out, but this is going to save you a lot of time when it comes to being profitable. So, first one we're going to look at is this one. So, you're on the 2 hour and you've entered your trades. Let's scrunch this up a bit. Yeah, so you're on the 2 hour, you've entered your trade right here, and then the entry was here. So, this is what you're going to need to do. So, you are going to measure the stop loss distance, like so. Move this to the entry position, like so. And when price closes above here, and that's this candle, you're going to move your stop below 8 pips to 5 pips below the last lower low. So if I take this brush, it closed above on the 2 hour, and I want to put my stop 8 pips to 5 pips below this. So that's going to be the first stop. Then you're going to wait for price to break the next higher high. So it hasn't made any higher highs until here. So you're waiting for price to break through here before you put the stop underneath the lower low. So if price had broken through and it's going up and it stopped above this level, then I would put my new stop 5 pips to 8 pips below this level. And then if this was the new, so I'll show you. Let me show you. If price had broken this level, this new higher high, and broken and closed above here, I'd put my stop 5 pips below here, and then wait for price to hit my take profit, and then bang. If it stops me out, I'm still in profit, so it doesn't really matter. But you just want to be able to manage it, and it would be the same with this trade. So entry was in here. You want to measure. I can use this one. You want to measure the distance of your stop loss. Then move the distance up. Then wait for price. So once it moves the distance of your stop loss, you want to move your trade to break even. That means you move the stop loss down to the entry point. So even if price still knows where it's going to take you out, the safety net is below your entry. So you can no longer lose the trade once it's a few pips below your entry. You'll just be out at break even, as in you don't make a profit or you make a little profit. Then you want to look for, like I said, the lower lows and higher highs to be broken. So higher highs there, close with that red candle. You're going to put your stop underneath, wait for the next one, price broke here, put your stop underneath here. Let's bring this up a bit, and then so on and so forth. Price broke here, hit your take profit. It doesn't matter if you moved it underneath, but you would have been covered. So that's exactly. And then we're going to look at the risk calculator, because you don't want to be risking too much. The good thing about using 1% to 2% is that it will take so many losses for you to put even a dent in your account. It keeps you psychologically good, and it keeps you focused. It helps you focus on compounding your account, because with compounding, the bigger your account gets, the more money you make, because you'll be risking more per account, but it will be the same amount of risk, but the profits will be higher. So when you be building this from $1,000 and you're making profits, it will turn into $2,000, $3,000. You'd be risking more per trade, but you have more profits per trade. So you're compounding your account with time. So if it was, so I entered here, I would measure how many pips. If you see on this right hand side, you'll see a gray. You see gray numbers moving up in number. That is your number of pips. You can measure your number of pips on the side, on the right hand side. That's the current value of this currency. So you want to measure what this stop loss is. Remember, it's your entry included the number of pips above or below the stop loss you are. And then you want to enter it into here. So let's say it was 15 pips. You want to put it to the currency pair that you're trading. So if it was Euro USD, Great Britain NZD, but this is NZD USD, and then you would put your risk, which is 1. How big your account is. So let's say it's $1,000, and then what your actual account currency is. So mine's in pound. That's what you'd be using. Then you press calculate, and this is the lot size that you need to enter. Either it's on your MT4 or whatever trading platform that you use to enter your trades. So mine is via Trading Way, so yeah, Traders Way. So I would be using MT4 on my phone or on the computer. But there's also a way, I know people also use this platform to take their live trades and their demo trades through. So I would suggest to look this up on the internet and search for it, but only use it under caution, because I've never done that before. So I'm suggesting you to research it properly, and even ask the people that run this site how you do so properly, just to make sure there's no mistakes when trading through this actual platform. But I'm aware that people do that, so it's just one of the things to keep in mind. So done support and resistance and trend lines, moving averages. In further lessons, nuggets for you, episodes of you, I can show you. We can talk about um, how you would take different trades, what you would do. So let's go on to a higher to a higher time frame. So we go through what to do if price was to come down. So that's price traveling down, break this trend line, how to take that trade. So sometimes, usually you would look for a retest. Retest, you look more for that morning or evening star candle formation, and then you would focus on taking price to this lower trend line. There's different ways, and then you can look at the price. You'd have your counter trend line, wait for price action, wait for price to move into your direction, break that counter trend line, moving averages in play, enter, and then you'd be managing your trades on the break of these higher highs, putting your stop just below 5 pips to 8 pips below. If you check out Baby Pips, it will show you what pips are, how to measure pips. It's just a little bit easier, so I can focus on the fundamentals. And then we can do, in later lessons, how to do Fibonacci. You might hear that a lot, people talking about Fibonacci. So yeah, so we can do market structure, we can do how pairs move differently, we can go over correlation. There's loads of stuff you can add to your bag of tricks when it comes to trading. But hopefully you enjoyed the series. The nickname of the series is Can I Take a Trade in a Week? And just be sure to check out the resources below, and to check out the other parts of the puzzle for this full course, because you need all the parts to make this strategy and this full course work. So it's not just a strategy I'm giving you, it's a full course, because you got risk management, you got all the parts of the puzzle that you need. If you're interested in trading, you can apply this to cryptocurrencies, you can try this to stocks, but there's different ways, different parts of this. This is just the initial parts, just to get you ready, but there's additional parts. You can hit me up on Malachi FX, and you can hit me up on the email down below. I do mentoring. If you want some tips, just hit me up. If you want some mentoring, then hit me up and we can go through the different parts of this course, or some of the different ways I trade. So Malachi FX, thank you for viewing this course from start to finish, hopefully, and I'll check you out in the next episodes.